Good morning, it's Jeffrey Cohen. How are you? Today is Thursday, June 9th. We're going to talk about our trades on Avaya and the news that came out with Avaya last night. And then we're going to go through the more traditional discussion of pre-markets and futures and where's the market going and what do we see out there. In fact, we're also going to talk about something cool. We talk about the VIX and we talk about volatility and variance and we run it in our model all the time. Last night, while I was resting, I thought about something very important. I found a connection between the VIX and S&P 500 price variance. Or in fact, I didn't find the connection. That's super important for you. So let's start with Avaya. So what happened with Avaya yesterday? Well, let's dig a little deeper, right? So what I'm going to show you is the actual trades we made yesterday. So booyah. Here's a presentation that Avaya released yesterday. Avaya says we're doing great. By the way, we can't show the whole name because that's our new marketing. We've got 90,000 customers. We're in 190 countries. Take a look. 57% of the revenue is in the United States. That's important for later. We are the composable enterprise force multiplier. That sounds like a Tom Clancy novel. They do artificial intelligence, multi-cloud application ecosystem, although they just signed a deal with Microsoft. So Microsoft is going to be their cloud partner. I don't know if that means only cloud. It says they do AWS, Google Cloud, Microsoft Azure. So these guys must be the software company, right? And they've got builders and consultants and all that kind of stuff. So you look at all these business metrics, and none of them seem to make any sense to me. I actually can't understand most of this. And why would you want 89% of your business to be software and services? Avaya forever made hardware. Okay, so I don't get it. So you're going to have to convince me why software and services are good when Avaya sold hardware. And we're going to talk about it. So they talked about the credit rating of their customers. They have all kinds of customers with all kinds of credit ratings. They have a mix of industries, finance, healthcare, government. Dark is bigger except for others. So services, healthcare, finance, and government. So they're saying it's a positive shift that they're taking some of their maintenance. See the install base? Install base is about the same. But they're moving some of their maintenance. So think of it as Avaya hardware software maintenance. Normally you charge 15 to 22% of purchase price. Wrap it up for 3 to 5 years. But they're now offering them cloud. Okay, I get it. Everyone loves cloud these days. Recurring revenue. Now this is where I struggle. Because they're moving from getting paid up front to getting paid over time with a financing charge. And it's as you use it or as a service. So you could use less, you could use more. And so I love it. The recurring revenue is now 66%, and I think they're estimating up to 69%. They're saying it's profitable. But here's what's funny. Title's profitable business model. Non-GAAP, so I don't know that I trust that, but non-GAAP gross margins fell in Q1 and Q2. And adjusted EBITDA margin fell dramatically. So here's the thing. They're giving up their profitability by moving customers to the cloud. And just note to self, when you sell hardware, you figure out your pricing based on the cost of the metal and the components and the software and the markup and the brand, and you sell it. I love the hardware business. God, I love the hardware business. Just if you know my background, I love IT hardware. Love it. It's a profitable business. You get the software maintenance, the hardware maintenance. It's cash. Love it. Always loved it, by the way. So moving to software and services is really hard for a hardware company. In fact, I wrote my dissertation for my PhD, which I never finished, on this topic. Okay, so I love this topic. It's a great topic. Okay, so there was one chart though that I thought was important. Well, this weird stuff. They're not really helping. Here, this one helps. So they're showing how the model's supposed to work. So normally you sold $210,000 for a PBX system or a call center system. And let's talk for a minute. I used to love this stuff. I used to help clients fix their call centers. And I always would ask, why is the call center software, why is the PBX, why is the telephony applications on premise? And he said, Jeff, it's really simple. It's two reasons. One is latency. You got phone calls coming in. You got a customer on the phone. You're banging away at their database. You got to know right now because they want to know, where's my order? The bill's late or the bill's wrong or help me out or I'm calling because of a customer problem. A power went out, something, right? What's my bank balance? And you can't have latency. You can't be hitting a cloud in Virginia or California. Or God help me, we have a problem with the U.S. cloud. Now we're hitting Europe and Asia. No, thank you. Customer calls, I need to answer it now. Plus, God help me, my network goes down, a backhoe hits a fiber optic cable, and now my call center's dead. Oh, I wonder why the phone didn't ring. Oh, maybe my customers are happy today. No, your phones aren't ringing. Your call center's down because your on-premise equipment is now in the cloud somewhere, and you're in the cloud somewhere. It doesn't work. Fine. Number two, do you think the cloud service providers are going to raise their prices with inflation? So let's assume that they raised their prices 8.5%. That just took your profit margin down. Let's say you doubled your money, it takes your profit margin down 4%. If you actually don't have good profit margins, you lose 8%. So I love it. You're now putting your hands, you made a deal. You had a good sales rep and they sold a piece of hardware with some software and services for $100 or $210,000. And you probably made 50% margin and the customer was happy because they got a piece of equipment. They installed it. They wrote it off. With the new government regulations, tax regulations, they wrote that thing off in the first year. So $210,000 was really like $150,000. They loved it. Now what do you do to them? Oh, now it's as a service. So now you're going to pay $180,000 and $40,000 a year. And then I'm going to come back to you in year 4 and I'm going to make you pay another $180,000. You know what the customer's thinking. I had a piece of hardware. I used it for 5 or 6 years. I wrote it all off in the first year. I made money. Love this business. I didn't mind your sales rep smelled bad, wore a dirty shirt. I didn't care because I got the tax break, I got the hardware, and it worked, and it was fast, and I didn't have latency issues, and the network, and all of that. But now you're going to come to me and say, oh, Google Cloud Platform had a problem, so I'm sorry, your call center was down once a year. Well, that once a year costs more probably than the whole $180,000. But that's fine. So now I'm paying $180,000 in the first year up front, and then boom, boom, boom. Now, when I look, though, there's no working capital in the first on the left, a perpetual, because you get a check for $210,000. You either take the hardware off the shelf or you make the hardware. Make it quick because they want the order, right? And then the $30,000 on maintenance, you probably have a maintenance team. I remember I worked for Comdisco years ago. We had software maintenance team. They sat in 6 cubes. It didn't matter if a new customer came in. It was the same 6 cubes for years. I worked there for years. They never hired anyone. They did a great job on software maintenance. Sometimes I would hang out with them and we would have coffee, right? But it was free, right? Software maintenance was free because I already got to do the maintenance if I had one customer. So maybe there were a few more calls, but same cubes, same people. Love that business. Now, we're hoping that the customer in year 4 gives us a new order because here you did $300,000 in the first 3 years. Here you do 300,000 in the first 3 years, but now you're waiting. You have to go back and sell them again year 4. I don't know. Maybe by year 4 there's a new company out there. So I don't know that I like it. So I went back to the 10Q because I thought, Jeffrey, sometimes you're a big smartass. Show me the money. Show me the money that this company makes. Show me what you're talking about, Jeff. I don't care about all this talk. Show me the money. So here you go. This is the 10Q. Ending March 31st for 3 months and March 31st for 6 months. Let's take a look. So my product revenue went down. My service revenue went down. Okay, I get that. My product cost went up. My amortization of intangible assets went down. It's great. And my service costs stayed the same. So I sold less services, but my cubicles were still full. I got it. What am I going to do? Fire all the people? I didn't have some orders, right? Now we look at SG&A. Now they did reduce SG&A, which was nice, by $19 million. But they increased a little R&D. You got $60 million in R&D. They got $40 million in amortization of intangible assets, which I don't care about. Some recurring charges. And what's nice here is their interest expense dropped to $54 million, but I read in their financials details that it actually was $60 million. Their interest expense is now $60 million in this quarter. So let's run it through. You got $716 million in revenue. It cost you $345 million to sell. That's cool. So you had a $371 million profit in the first quarter gross. Now my operating expenses were $350. So I made $370, cost me $350. And these expenses, you're not really going to change them. You're not going to fire all your salespeople. And you're not going to stop doing R&D because you're a software company now. You have to be very good. You have to sell now every 3 years, right? So I made $20 million. How did I do last year? So last year, this quarter, I took in $410. My cost was $370. I made $40 million. Okay. So I made 20. I had a bad year. Last year was 40. Actually, you saw it in the charts that they accelerated their move to one cloud, the composable way to awesomely optimize your business. So let's look for 6 months. Because, Jeff, maybe you're not that smart, Jeff. Or maybe I'm not. I'm not that smart sometimes. I will admit that. So 1.43. That's about double. I got that. So there's no seasonality here. And a 1.48 is right about double. So the revenue just went down. I got it. Gross profit, it's just about double. It's amazing. This business is so consistent. Their operating income for 6 months was $22 million. So that's only $10 million a quarter, but we're going to give them the $20 million a quarter just because the math is nice. But they were as high as $53 million a quarter in profit before. I love it. So 50 went to 20 for the 6 months, but it really was 40 went to 20 for the 6 months. We got that. But my interest is still going to cost me $60 million a quarter. So even last year I wasn't covering my interest charges. This is the fundamental bear case on this company. It doesn't matter. You play around. You got to cover $60 million a quarter. All right. I'm not crazy. I got it. Right. So let's look at the stock this morning. Oh, wait a minute. This is even better. So I marked the trades I made. I marked the trades I made yesterday. So first off, I'm not a trader in the way that a lot of people are traders. I'm really not. I'm more like a Nemeshi guy, right? I sit around, I make videos, I run models. I hope clients buy my models because then everyone does well, right? Because I get paid for my intellect, for doing the software stuff and the data and looking at things like variance, right? But so yesterday I just couldn't take it anymore. If you listen to my video yesterday, I had a really bad morning. So the day starts, the stock's at 5:30 and it drops to like 5:01. I don't know that I covered that early. Yeah, I did. I covered at 5:01. I covered my short. So in the morning, I sat there in disbelief as it went from 5:30 and I was underwater on my shorts. I was sweating, right? I couldn't take it, right? So I'm like, oh yeah, I got out. 5:01. And then it went up and I thought, oh, I'm a genius, right? I covered my short. And then I watched period of disbelief where I covered my short too soon. And I watched in wonder and regret as the stock went from 515 to 474. And I'm watching it and I'm looking and it's like 574. And I didn't understand. I just didn't understand. Why did it drop so much? Nothing happened. So I went long at 474. I went long. I couldn't take it anymore. I'm like, I'm buying this thing, right? So I bought it. Next thing you know, it rockets back up, and I sold it at 513. Like a half hour later, an hour late. How long was it? It was like a half hour later. I made money. I made more than I made on the short. And the reason I sold it, just so you know, is it kind of flatlined. So it had been going up like every minute or two. Like this was the point at 5:02 where I got nervous. So pretty much it went up, then it went up, then it went up, and then it flatlined. And I thought to myself, it flatlined, right? Volume kind of fell. I'm not waiting any longer. Take the money. I hate the stock anyway, right? Get the money, get out. So I got out, 513. And then I watch, and I'm thinking, I should have shorted it at 513. I'm not that clever. I'm not a trader, right? So I watched it go down. I watched it go down to about $5, and I thought, yeah, we're done. We're done. This thing's probably going to be a $5 stock from now on. And all of a sudden, it starts going up again. And we're talking going up on like no volume, right? So I'm looking, and I go and I use the CBOE book viewer. This is important for you to have. It's CBOE.com, U.S. Equities Market Statistics book. I don't know how you find it. It's book viewer, Nasdaq. And there's 4 different CBOE exchanges. There's BZX, which a lot of Avaya trades on. There's BYX, which not a lot trades on. There's EDGX, EDGX, which a lot trades on. That's the most popular for Avaya. See, it's already trading pre-market. 504, 503, 497, 491. God, I should cover my shorts right now. I'd be out. I'd be out with a huge profit, right? But only one share traded at 491, so it's not a lot of shares pre-market. Pre-market's kind of like sending messages. On one share, I can afford to lose 6 cents because it cost me 6 cents, but I just sent a message to the market that Avaya is only worth 491. So that's interesting. Let's take a look at Nasdaq Book Viewer. So I don't just like to look at the CBOE, I like to look at Nasdaq. So you have to pay for this one. It's called Nasdaq Book Viewer. It costs you $15 a month. It's not a big deal. I've been using this now for a couple years. And we'll look at Avaya, and we'll see on Nasdaq there's already some orders loaded. The buy is at 458. The sell is at 510. But really you look at 100 share round lots. So it's really 537. So you got a spread there of 438 to 537. That's like an 80... That's a 79-cent spread. That's 15%. So anyone who trades pre-market in this stock is like on heroin, right? Let's see who has these. So you can select what data you show. And what time did they enter the orders? And what's the total number of shares? Let's just take a look. There's a lot of data you can look at here. So what I see is VRT, and we can look up who that is. they've already put in their 200 share to buy at 452 and 100 to sell at 541. So they're just looking to make the spread. Okay, so that's the second thing you look at. Let's see, you got Avaya there. You got the CBOE. And you can actually make this one pretty small. It still shows up nice. Pretty small there. So, okay, so let's go back. So I looked at the... so this whole thing is about Avaya. I didn't mean it to be. I'm sorry. One last thing to show you on Avaya, just because some people don't know how to do this. So we're going to go to Finra Bonds. So this is finra-markets.morningstar.com. It's Finra's site. I love this site. I always show it to you every morning. I show you the site, right? By the way, I don't think this page works, the first page, but that's okay. So we look at corporate bonds. You could see advancers, decliners. Oh, decliners. There was more decliners than advancers. That's not helpful. How about treasury and agency debt? It's pretty flat. A little bit more on the decliners. Lots of dollar volume, though. $1 trillion. Oh, that's a lot of volume, too. So let's do a search. Search Avaya. Did Avaya have any debt? Now, Avaya has $2.9 billion of debt. The question is, how's it trading? So we look here, and I'll show you how to read this, because this is important. I never knew how to look at debt. I never did. I was so not smart about this, right? So I'd say about a year or two ago, I figured it out. So you look, and Avaya has 2.25 coupon, 6/15/2023 maturity, and I don't know how to tell the difference between the two. So what I did is I clicked in it, and one of them hasn't traded, so it must not be kind of real, quote unquote. The other one is the corporate bond, the 6 1/8, maturing on September 2028. That has a B- rating. This one is a CCC, so this is true junk. And the reason the S&P, the Standard & Poor, downgraded this bond on May 20th is because they spent all the money. Remember we looked at the numbers? They made $20 million in profit. They paid $60 million in interest. They were down $40 million in the hole before they even started, much less doing any kind of monkey business, right? That spent even more money. They spent like $150 million in the first quarter that they should have spent on the bond. But let's go in. So now let's take a look. So the price is 90.75 cents. That's based on a $100 par value. These are $1,000 bonds. So if I wanted to buy a $1,000 bond, it would cost me $907.50. I would yield 12.31%. God, I love it. Let me go look on my bank account. Oh, bank account. You earn 0.5%. Well, if I bought Avaya bonds today, right now, I'd earn 12%. It's a dream. It's a dream. I can earn 12%, but that assumes Avaya pays the bill. People don't assume that right now. Now, on the 6 1/8 maturity, you only have to pay $765.91 for $1,000 worth of bond. It yields 11.5, which isn't bad. So let's take a look at that Avaya, and let's see how you look at it. So this is what it looks like. This is so fascinating when you look, because you realize that there's bond traders out there, like looking at Avaya every day. And so back in September, this thing was trading over 100. Like, that's not abnormal. This was at 120. So you paid $120 for $100 worth of bond because you love the fact that you earned all this interest. Then it was 108, 105, whatever. It finally crossed 100 for the last time February. So something must have happened in February. My guess is the leadership said, oh my God, we spent $170 million. We can't pay off our bonds. We're going to have to call Goldman Sachs and beg for more money. Okay, fine. So that happened, right? So it hit 100, and all of a sudden it drops below 80 in May. And that's right around where they downgraded. They downgraded, it was at 82.75. It went all the way down to 77. I wish I would have bought the bonds at 77. They're trading at 90. I would have made money really fast, right? So now it's making its way back up because people feel like maybe they're going to be able to refinance and maybe they'll make everyone whole. But if you take a look, this bond yesterday went down to 87, 88, 91 on over $1 million. This is the way you read it is, this morning, June 9th at 8:12 in the morning Eastern Time, someone bought $500,000 worth of the bonds at $90, not $907.50 for every thousand. Okay, that was buy side. So somebody actually went out and bought those bonds. They said, Jeff is going to make this video, and he's wrong. I love Avaya, and they're great, and I'm going to earn 12.3% interest waiting for a year, and it's going to be great. The person before did it at 4:12 and 4:12, and this was a sell side. So they must have had some extra bonds they needed to cover a trade. So S and B, right? So now let's look. So the big trade was at 4 o'clock yesterday. Over $1 million. The buy side paid $89.75. The sell side paid $90 and $88 to fill the trade. Okay, so I mean, it's different than in stocks when there's a buyer and seller. With bonds, there's a buyer and a seller, and the seller's an institution that then has to go out and buy. Because no one's holding $1 million of Avaya bonds on their balance sheet unless, well, Goldman Sachs, maybe you're holding some bonds on the balance sheet, and when you talk about how you're refinancing, the bond goes back up to 100. It's possible that one of the companies that's doing the refinancing bought up a bunch of the debt. Maybe it's 77, maybe at 80, and you can go back and you can look historically. Those are around 80s there. 77, 76, 75. This is in May. So somebody might have said, you know what, I'll buy up some of those bonds in the 70s, and then I'll work through the refinancing, and I'll make more money on the bonds going up than I will on the actual offering, bookmaking on the debt. That's a hypothesis of mine. That is not, investment advice. But it's interesting when you look at it because now you see what's going on with the bonds. So the bonds strengthened this morning. Yesterday they strengthened, and this morning somebody already made a buy. So people are confident. So this is a senior unsecured bond. That means they sold an indenture that has nothing behind it. Just the good faith and credit of Avaya. When I looked at what they said on their investors page, let's see if I can find that. It's important. Where is it? Fine, I'll show you how to find it. Type Avaya Investor Relations. Go to the page. Events. No. Go to the SEC filings. Current report filing. It has a nice PDF for you. Let me take a look. We're going to blow this up for you. This is actually very important. I noticed this, and I think it's really important for you. On Wednesday, Avaya, a subsidiary, issued a financing seeking to raise $500 million in new secured debt. New secured debt, which will be used to pre-fund the refinancing of the existing $350 million. And I'm assuming the rest of the money goes into a bank account where they can waste it or spend it on interest on the bonds that they already have. But whatever they're going to do with it is fine. That money's going to go somewhere. But it's secured debt. So the question is, Why would I trade unsecured debt for secured debt? Well, what I'm doing is I'm kind of sticking it to the existing bondholders. So let's take a look at that other bond, because maybe that's what we're looking at here. Let's go back. My 6 1/8. It actually doesn't say. It says U.S. corporate debenture. But my guess, I'm not a betting man, but my guess is that this $1 billion is unsecured. No, senior secured. All the stuff's secured. What are you doing? It doesn't even matter anymore. They got $2.9 billion in debt. So, well, it's all secured. No, I don't think so. Oh, this is a first lien note. So, unless they're going to make the $350,000 first lien, I have no idea what's going on here. So, if we look at the trade history, hasn't traded since yesterday. Oh my God, yesterday it... Oh, wait a minute. This is really weird, guys. Oh, this is as reported. So this is just a buy side. That's okay. Here we go. So it didn't actually happen at 8:44. It happened earlier in the day, and it just got reported later. Sometimes Trace has a little bit of a delay. So on the buys, you notice that there's only one buy side yesterday. So this was the second buy side. So what happened is the sell side bought up. It's interesting. They seem to have bought up a lot of debt, and it doesn't really make sense to me why they would do that. So there was $1 million at 76 buy, $1 million at 77 sell. So they lost a little bit of money covering that trade. And then $1 million was bought on the sell side, 140,000 on the sell side, 180,000 on the buy side. $1 million plus on the sell side, 600,000 on the sell side, 500,000 on the sell side. 500,000 on the sell side. So it looks like what happened was the desks bought up a bunch of Avaya bonds, the longer maturity bonds. Again, I don't know why they would do that. Maybe they just did it because 77 cents on the dollar is a pretty good deal, and figuring Avaya is doing a clean slate financing, raising $500 million, maybe it's better. Okay. Well, that's odd to me that the money makers, the market makers, the money guys, are actually buying up Avaya bonds yesterday. So these were our trades. We actually made money yesterday. Woohoo! Very exciting. So it is 8:20 in the morning. Let's just focus on Avaya. I guess this will be an Avaya video. That's so weird. I don't do that. So Avaya pre-market is trading at $4.99. So first off, can I just say how smart I feel right now? Because it's only 200 shares though. Come on. You guys are knuckleheads. It's 200 shares. Pre-market. Don't do that. That's just nuts. 200 shares. 70 of them traded on CBOE. I guess the other 130 must have traded on Nasdaq or NYSE. That's so weird. So let's see. Can I find... Is there a Nasdaq Avaya... Sometimes they show data. Pre-market live. It's $4.99. Oh, look at all those volumes. 3 shares. 1 share. Somebody bought 100 shares at $5.14. They were probably covering some short or something, right? There's nothing trading. This is just... It's I don't even know why you would trade 3 shares of Avaya. I mean, I guess if you're a really small investor, and no shame, somebody makes money on a share or two. I guess you can make a penny, make 10 cents, buy a bubble gum. right? Oh, hey, Ma, I just bought a share of Avaya at $5.13. Well, son, I just bought 2 shares of Avaya for $4.94. Come on. What are you doing? It's killing me here. So, nothing's happening with Avaya. It's at $5. It's crazy that Avaya is at $5, right? It was at $5.25 last night. What are you doing? Let's take a look at the 5-day. So what's interesting about the stock is it's floating around this $5 range. So I had some key lessons that I wanted to share with you. And maybe now's the time to share them. Probably is. Just with a minute or two to go, let's share. I'm going to zoom. Oops. I don't want to change that, because I think it's important to see it. I want to show you something. It's not that either. It's here. It's this. All right. I can't show you, so I'm going to just read them. Key lesson number 1, wait until the momentum stops or slows. Look for changes in momentum. 2, the actual numbers matter. So this thing trades around $5, so trust the $5. You notice pre-market's $4.99. It's not $3.99. It's not $5.99. It's right around $5. History matters. This stock rises and falls into the close. Looking back, volume matters. So when you look at the volume, this thing went flat on the volume, and then it started to pick up again. This thing dropped in volume. This thing started accelerating into volume. So I sold maybe a little bit early, but come on, it was 7 minutes before market close. I was nervous, right? So volume matters. This was a trader's stock day today. The big bag holders, there's like 5 or 6 large investors that own most of Avaya's float. I've identified them because I was thinking of sending them a letter asking them to buy my services. There aren't many. They must not have even been in this market yesterday. There was news, the bond news, but I didn't see it. I only read it after market close. I was very myopic on the market. So watch out trading shorts near the close. This was interesting. I sold shorts 7.5 minutes before the market closed. Right there. Do you know it took a minute for that trade to clear? A minute. You know, I tried to close out my position at 5:16, 30 seconds before market close. My broker couldn't make it. My broker rejected the trade because it took him more than 30 seconds to try to complete the trade. And then lastly, in after hours trading, it's really fun, right? You put it in. I put it in for $5 to cover my position. Do you know the stock traded all the way down to $5.01? It wouldn't fill me at $5, even though I was top of the book pretty much the entire session. So don't count on after hours or pre-market. So I want to thank you for watching. I can't believe the whole video was on Avaya, but to me it's just a negative case. And good luck out there. Hopefully you make money today. You take care. Bye-bye.